Welcome back to Fast Market on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Monday.
Happy Monday to you. We're talking Pepsi. Everybody thinks it's a beverage company, but I always think of it as a Frito-Lay company because that seems to be where a lot of their growth is at this point. But what kind of data are you guys seeing out of here? Got an upgrade today. The analyst basically said he missed the call on it before, but he said it remains resilient as far as sales growth goes.
Yeah, whenever we look at Pepsi, there are so many brands that we can break down here. You've got your classic Pepsi, but you've also got all of the Eatos. You've got some cereals like my personal favorite, Captain Crunch. Nice. We've got a lot of these smaller brands. You've got like Sabra Hummus. You've got, Lay's. There's just a lot to cover that fall underneath Pepsi's umbrella. If you're stopping at the grocery store, you're stopping at a gas station, chances are you're probably grabbing a Pepsi product as either a snack or a beverage. And when we look at this, one thing that we see historically is it's interesting because one of the things that's really been lifting Pepsi of late is its ability to pass prices along to consumers. So on our end, we actually see a bit of a demand slide, a bit of an overall buzz slide, especially among Pepsi snacking products in terms of overall volume. So in terms of overall mentions of people who are talking about consuming a product. However, we know according to its results that it's been able to increase sales, and increase revenue. And because it's able to raise those prices, because it has this perceived pricing power, because of the power of its brands, that they're such a namesake that they're brands that consumers want to turn to. So it's interesting because it's a bit of a mixed bag. Whenever we look at this on the macro perspective, you can see food price concerns are about 200% higher than they were 2 years ago when we really started to see these food pricing increases take effect. So this is something that's the rising prices of consumers who are willing to pay more for these snacks has been almost a tailwind for Pepsi. However, we're starting to wonder, we're starting to see an increase in this slide in demand. So are consumers starting to get to a bit of a breaking point and starting to, perhaps consider more private label brand options? That's something that we're watching moving forward because it's an interesting tipping point that we're reaching in our data at least.
Yeah, Megan, when you look at PepsiCo as a company, we compare it to Coke a lot, but they're not the same, but then sometimes they are the same, right? Both of them had organic sales growth of about 15% a year ago through 2022. Both companies' sales trailed off the second half of the year. The numbers were still higher, but the volume, like you mentioned, the volume was down, prices were higher. Where it's different is the margins, right? Coke does better on margins than Pepsi does. Now, Pepsi says they're trying to get those margins up. Coke's are 29%, Pepsi's 13%. Pepsi's said in their last conference call they're working on, cutting costs at Frito-Lay to keep your hands off my Eatos, PepsiCo. Don't cut back on the Eatos. But they're trying to get those margins back up. But this is, like Tom mentioned, it's more of a food company. Are you guys seeing any strength in some brands versus others?
Yeah, one thing that Pepsi has, it's got these big brands like the Eatos, like you mentioned, but it also has some smaller portfolio and up-and-coming brands. And when we look on a brand level, I know one of the brands in particular that is surging is Popcorners. I think that a lot of this is to do because it was featured in the Super Bowl, but we do see demand building in some of perhaps their healthier brands. You can see here Popcorners, Tropicana, which is juice, Bubbly, which is their sparkling water. These are consistently doing well and showing or flexing more pricing power, perhaps than some of the larger brands that you would consider down at the bottom. So I think that Quakers is probably the weakest point whenever we look at our data, and then some of these healthier brand options on Pepsi's front appear to be more resilient. However, when we look at just overall volume and mentions, the Eatos and the classic Pepsi and Mountain Dew and these sugary products and these high carb products, these are the ones that are getting the most chatter overall. So, it's not that these brands are necessarily going anywhere. It's just we're seeing that growth isn't as significant as something like these newer, smaller portfolio brands that Pepsi is really trying to build and grow.
Megan, that kind of goes into my question here, because if you look at that, as far as purchase intent mentions, you see their bigger brands, which on volume is what they want probably on the top of that chart that you have. But at the same time, it seems like those are the ones that are wavering, where maybe the smaller volumes are actually going up, right? So
yeah.
that raises concerns for me when I see that, when you got Pepsi, Mountain Dew, Lay's, Doritos all falling into negative territory. Is that a trend that you're seeing, or is it seasonality, post Super Bowl? What is this attributed to?
You know, I think a lot of this is something that Pepsi's kind of already touched on, that volumes are slipping a little bit, and we're seeing just overall, I think the mentioned volume for Pepsi is down by about 5% year over year. This is a continued slide and dipping a little bit. And so we are a little bit concerned that, you know, maybe consumers are reaching for these things less because the pricing is really weighing on them. However, when we look at overall happiness levels for Pepsi, the happiness levels are pretty consistent. It's about 70% positive, and it has been this way for about a couple of years now. So, you know, we're not seeing a big dip in sentiment, which I think is promising for Pepsi, but we are seeing those continued slides in volume. So I think really it comes down to, you know, how effective can Pepsi continue to pass along these price increases to consumers? How long can the consumer withstand it? But just whenever we look at this from a comparison point, you know, Pepsi versus a Coke, Pepsi is a little bit more susceptible to these shifts in consumer pricing concerns, because they do have this massive snacking division that, you know, Coke isn't necessarily playing in that game, whereas Pepsi is. So just overall, our data right now, if we were to have an earnings score, I know earnings isn't for a while, but we're at a negative 23. So for us, this is just shifted into negative territory out of our typical neutral territory. But one thing that we don't necessarily take into consideration are those price increases. So far, Pepsi has been able to build and grow and really lift itself based on these increased pricing, but we'll see how long that holds up.
You're seeing that a lot, though, across the board. Home Depot and Lowe's had that. Lower volume, but higher prices. So the sales look good, but it's on lower volume.
Yeah, and I was just looking at some of the grain prices here, like corn. Those are off of highs that we saw late last year, too. So maybe some of those price hikes will start to improve margins a little bit, too. All right, great stuff, as always, Megan. Appreciate it.
Captain Crunch.
Thanks, guys.
She's
Captain Crunch.
Crunch.
That used to be solid.
Captain Crunch.
I loved